Welcome back to another episode of Hoot and Poop. So in today's video, I will be covering DataDog's fourth quarter's earnings transcript as well as some of the updated valuations. So without further ado, let's dive straight into the transcript. Now, if you can see on my screen here, basically the fourth quarter transcript, DataDog has reported that they ended the quarter of about 2,000 customers with over 1 million of ARR, which is annual recurring revenue, because DataDog is a SaaS company. So these numbers went up about 1,000 users and compared with year to year. And the dollar-based net retention rate continues to be more than 130%, meaning to say that more customers are still willing to pay more to DataDog itself. They have also talked about, in this quarter, they have acquired CoScreen, which is a screen sharing platform that allows participants to interact with joint workspace in real time. To me, it's not super significant, but at least I do want to see more acquisitions ongoing, because it just opens up new verticals for DataDog itself. They have also said that they have launched over 80 new integrations in cloud. So this tells me that they are quite prominent in terms of their spaces in cloud coverage for users, and to date they have about 500 integrations that are ongoing, which includes they're partnering with three biggest data centers, which is AWS, Azure and Google Cloud. Alright. Then the next important point I gathered is that they have also talked about going beyond observability, which will means to say they are going into security, cloud security platform, which goes in line with the past reports that they have talked about. It's something that as an investor we want to see consistencies from the management. They have also said that the FedRAMP moderate authorizations has come. They have received this FedRAMP moderate authorization, so meaning to say that DataDog can now sell to US federal government agencies their services, which will then opens up a new vertical for them in the government sector, because previously they were always just focusing on private sectors, but now they can go into government sectors itself. And this quarter they said that they have signed a major 6 years deal with a major US airline, a 7 figures upsell. Right, keyword upsell with a European car company, as well as another 7 figures upsell with a multinational beverage conglomerate. So these upsells means to say that these customers were existing customers of DataDog, and they decided to purchase more services from DataDog, with that purchase, right, cost give them 7 figures worth of upselling. Okay. This is also something I gathered, which is something quite interesting. DataDog has donated 3 million, right, to the non-profit organizations, meaning to say that despite keeping the cash for themselves, they are able to even donate out to them. Okay, they have also added new 1,003 customers sequentially for them, which is a new record. Right. I will skip the rest of it so that you guys can take a look. I'll just highlight those important points. They have also said that they noticed that some of the customers that they like to get different services themselves, they are starting to come into DataDog with a consolidated one-stop shop platform services that they can give to this customer, which is something very, very unique. Because what I like about DataDog is that DataDog is like a one-stop shop where it allows customers to just use their one platform to solve all their monitoring observability requirements. Oh, this is something that's very interesting that I like to see. They have also said that in terms of their sales strategy, they have not made significant changes to how they distribute it. Okay, so everything is still the same. However, they did say that when their products are matured, then they will have to look into some other ways to go to the market. But at this moment, they are not mature yet, which is something very, very optimistic about it, because despite them having so many products, they are still not mature yet. It means to say the market is actually huge for them to grow. Alright. Then I'll move down to the other few pointers. Basically, they just said that they are focusing on keeping the gross margin to be around mid-70 to 80%. It means to say for every $1 of sales, DataDog retains about 70 cents or thereabout, right? So basically, DataDog also admitted, okay, because there's one of the question posed to them is that, do you think, you know, would there be a tailwind, or rather a headwind for when COVID starts getting better? So DataDog actually mentioned that, you know, they do not face much of a COVID tailwind when COVID hits in 2020. In fact, the trend and the customer trend and revenue trend that they are seeing now is actually a lot like 2019 itself, which also looks very similar to 2018, which is something good because, for example, Zoom they plunged, you know, because of the post-COVID era fear and stuff. So, but DataDog is different. They are seeing continuity in terms of the trend itself. Okay, and also. They also said, there's also a question on competitors, but DataDog has said that for them, they don't see, they do acknowledge there are some competitors, but what makes DataDog different from them is that they provide an integrated platform. They are cloud native, so this is something that we have to monitor. We have to go and do a research on all the other competitors to see if it's true or what DataDog is saying. Okay. They also mentioned, you know, saying that there's also a question asked whether if your prediction, you know, your guidance is it too conservative. DataDog actually admitted that they were a little bit more conservative during the COVID period, but even so, okay, now right, they still adopt a conservative approach, but maybe not too much of it. So something that's very good because we can, based on whatever guidance that they give, you know, at least we roughly know that there are still buffer for us to do our estimates as well. Now I'll be sharing a few key pointers that I've taken from the whole earnings itself. So the top 5 takeaways I have for DataDog is that, one, they are constantly adding new integrations in the cloud platform itself. Number 2, they have been very consistent with their words in terms of moving into the security platform. Number 3, they are conservative in their estimates, which means to say it gives investors, when we do our valuations, another buffer layer itself. Number 4, consumers are consolidating their services with DataDog because DataDog provides a one-stop shop. When you sign on with DataDog, it gives you a whole suite of products and services for their users. And the last one, number 5, is that COVID trend was not really felt by DataDog based on what they say, because they say that the trends are similar to 2019 and 2018. So this is something very good because at least we know that, you know, their services, with or without COVID itself, it is there to stay and it resonates with the users. Okay, so with all that, okay, this is my latest valuations. I've taken the annualized revenue, okay, which is 1.3 billion. All right, and then I estimate the growth percentage to be about, you know, 63% next year, 57% next year, which is like a tapering down across 5 years, right? And I estimate a free cash flow margin of 35%. Currently, they are about 31%. Okay, so the intrinsic value that I get is about you know, range from $132 to $172. Current share price is about $167. So this is my valuation. Alright, so I hope you enjoyed this video. So I'll see you in the next video. Invest safe.